You can see even around that 50% level, that price action is just so excitingly perfect. Like it reaches up to it, clears through it, comes back to it, reaches the premium, comes back to it, reaches the premium, fights through it, breaks down one more touch, and then just aggressively attacks that order block. Hey trader. Alright, so let's go through some Asia model review. I'm going to talk about limitations and ways to counteract it. So here's the daily chart we've been working on with AUD JPY as a pair of choice. We're going to be looking at Thursday's price action, this down candle here. The framing right now is we've been coming off of a long range. We're up in a premium state. We tagged into a bearish order block, and I'm going to be exploring the price action right around here, which is this daily fair value gap. As price was resting down, we had several days of bullish behavior back up into this fair value gap. We're going to be looking at Thursday. So here's the framing on a 1 hour chart, and I'm going to need to go through some Scout Sniper series concepts in terms of defining ranges. But to start off with, so on this we've got our time frame of 1 hour. We've broken down the Sunday through Thursday. Here's the Asia kill zone we're going to dig into. And looking back at this price action, we can see a choppy run up into the daily fair value gap, sharp rejection, left a couple of wicks, tasty lows down by sell side. Price ran back up through the daily fair value gap, forced this way on 2 rejection wicks, and then cascaded aggressively down. Now this down move during the daytime on Wednesday, going into the Thursday price action, which we'll look at, left relative equal lows before retracing back into this hourly fair value gap. So the context is we're up in premium of a range. We've previously gone into a bearish order block, and now we're chopping around this price action. So the trick here is, or the thing here that I'm going to work on, is articulating how to define ranges. So let's look at this. We've got this choppy price action. Price has been moving up throughout this whole time since the 29th. We start off July, choppy price action all the way through. Again, this is an hourly chart. We tag into 50% of the daily fair value gap. We make a first push down. Doesn't get far enough. It leaves sell side. We run up and we create on a weekly profile a Tuesday high. So right around midday and through the Asia session of Tuesday, we leave these highs intact. After the Tuesday high, we start to aggressively displace lower, but each displacement only takes a bit of sell side and then retraces back up into a range. So going into the Asia kill zone for effectively the Thursday trading session, we're exploring what's the direction. We're trapped between 2 fair value gaps. Within this range, this fair value gap right here has obviously rejected price, and it's right below a sell side liquidity that was swept. Sunday's sell side to be specific. So Sunday's sell side gets swept into a fair value gap. But we have to watch that we're still trapped here. There's nothing after Tuesday that is suggesting bullish, but we have a sharp rejection off of a discount array. Price is kind of trapped. We need to use additional tools to get our bearings on what ranges are we really looking at. So let's take a look at ranges. So this is the style that ICT was using through the Scout Sniper, identifying these swing lows and swing highs. And I'm using blues to identify what has not yet been taken, reds to identify what was taken, and green is what I'm going to discuss right now. So we've got this high, this low. This is giving us a main range, a master range. Within that range, we have several areas where price is moving in between. From this range low to this range high, Price comes back down somewhere into discount. That creates a new swing. Then this leg takes this previous low. Once that previous low is taken, we're now looking at this range as intermediate. We still have our external, and now we're working intermediate. So when this one gets taken, we're looking back from this high to this low, or this high to this low. This one gets taken here. So now we're looking back this high to this low. So as external range is defined, we're now looking at internal range. So let's do that again. So this low gets taken. We're no longer thinking about this low. We're now thinking of this low. And we can still use any one of these highs as any one of these three highs as intermediate buy side. External, intermediate, intermediate. Now let's move ahead. Once this low gets taken, we've got our intermediate, intermediate. This low gets taken. So now this is the relevant low. This is the relevant low, and any of these intermediate highs will remain relevant as the premium side of the range. Once this low gets taken, this is the relevant low, and any one of these highs will be the intermediate buy side. This low does not take this low. In fact, they're relative equal lows. So we are maintaining 1, 2, 3 highs up to this point, and we're only looking at these two intermediate lows and this external low. Price then goes choppy or bullish, however you want to look at it, but it's going up. This high now gets taken, so we're not counting this high anymore. It would be this low, relative equal lows, to this high. Price shifts down, makes a push up. It does not take this high. This high still remains intact. So these highs are eliminated, these lows are eliminated. We're looking at these relative equal lows, and this is the most relevant high. So here's what that looks like. This sell side remains intact. This gets taken, so we're looking at this high as the most relevant high. We also have this intermediary high, and then an external. So between this point and this point is really what we're looking at for our current range. So with that being said, let's zoom in. So here are those relative equal lows. Here's that high. So now we can apply premium and discount concepts. And here's where we see that FEG becomes more relevant because it's in discount from these lows to the most relevant high. So we have relevant equal highs here, relevant equal lows here. Now the price action between this low and this high was incredibly choppy. Choppy meaning not just consecutive runs on this hourly chart. On that daily chart, these were all bullish moves up. But the fact that it did not clear that high gives a huge pause because it did not clear an intermediary high. There's an expectation that we would pull back into the range. We're also in premium in the kill zone. So during the session of the kill zone, this move, if caught, and we look at that at the 5-minute, is where we would see price action. But the fact that it's moving back into premium, we'd have to be cautious of expecting any more buys. So here's the kill zone. 8 to 10. We also have our markers at 7, 1, and 8 a.m. Highs and lows of these previous sessions. We are aware that on the Asia model builder, if price sweeps or breaks below sell side, we're either looking for one of two things: an inversion to continue low within the kill zone, or a bullish shift, market structure shift, a return to a fair value gap, order block, or an OTE, and then a continuation higher. So with those decisions at hand, the risk is, or the question is, what could we possibly see in the Asia kill zone to help us get a move higher? So let's take a look at that now. So here's a replay chart. On the 5-minute, market structure shift would be necessary. And here again, the whole idea here is a limitation. What's the limitations of this model? So here's a sell side sweep. There's no market structure shift because we would expect that to come in after here. That should be our shift on the 5-minute. No shift on the 5-minute until this point, which is 9:45 p.m. Eastern, close to after the kill zone. We do see price tags back into the top of that breaker. So this down close candle here. And when I've got consecutive candles like this, I'm factoring all the candles in as the breaker. Price breaks above, retests it, and then starts to move away with the expectation that we've got buy side liquidity up here. On the 2-minute chart, we can see we've got something similar where price sweeps sell side. We have an aggressive move up, but there's no buy side structure shift here as yet. What we have instead is some inversion. So as price moves up, this fair value gap initially gets respected. Price moves down, breaks above the fair value gap. So every concept now is an inversion. For example, we have the 50% level. And once price breaks above, enter at a 50%, stop below the low. This is a high risk buy because the decision here is I am buying in premium. So this red and green on the side here is reflective of our premium and discount ranges from before. So here's that high in premium and then the low. Now we do have some relative equal highs up here, nice smooth highs that could be taken. So that could be a trade for sure. And then once we see that secondary shift, or excuse me, once we see this intermediate secondary shift down here, and we're getting back up above the range, so this is a range low. Just bring that in a little bit. So this is our range low. We see an intermediate shift here. So once price shifts above, we're expecting a retrace. Down close candles, shift above. We see another shift above, more convincing, and we've got the down close candle here. These two consecutive down close candles would be the order block. And all the same concepts would apply in terms of looking for a very tiny fair value gap in here, which gets tagged at this point after the market structure shift. Similarly, we have a shift again here coming back above the range low. Once that range low is broken, we're using the same concepts and we're taking either this fair value gap here, this order block, this one is the lowest down close candle, and we'd be targeting the buy side here. Again, high risk buy from the sense that right at the end of the kill zone, still valid, but we're in premium. So you really have two decisions here to make. Do you want to buy in premium, or would you look for concepts to sell in premium? And so as the kill zone ends, Here's the end of the kill zone at the end of this purple box. As the kill zone ends, taking partials, holding out for this possible buy side liquidity or even the top of the range, knowing that there is the high risk nature of it. And even looking up at this 5-minute chart, you can see how many wicks are being created, respecting those discount arrays and reaching up into something. So that would be it. That would be your decision. Do you want to buy in premium or sell? And once the kill zone is done, really, you know, I guess that's all you could do. Unless you want to really dig deeper on it. So here's the other concepts that I think are really cool about this journal entry. So here we go. We're in premium. We know we're in premium. We've been running down for the longest time. We've done the elimination of what's the range, where are we going, but here is where I think it gets really cool with this model. This is our range. We're only looking for price action between in the context of this high to this low. In the backdrop of our mind, we know we're in premium. So let's go full screen on this and start digging into it. Let's take our premium and discount concepts one more time. And we'll split this range from this high to this low. And let's drop in the 50%. So here's a 50% level, high to low. We know that anything in this range is now premium, yeah? This high to this low. This section up here is all in premium. And we'll put that in red. Let's fade that a bit. And let's move some stuff out of the way. So in premium, what things exist? Because the move that's in line with the flow until price breaks above this range is going to be bearish because it's in premium. So there's a couple of techniques that we know or can take from the ICT recipe book. So one recipe is the OTE, optimal trade entry. And even if you got in on any of these moves, you're just keeping in mind that there could be a reversal. The price action is a bit lethargic, right? Deep wicks, long retraces, deep wicks, long retraces. And so we start to see price wicking around the 50% of this OTE. The other thing we're looking at is within this range from this high to low, failing to break higher, going lower, we are looking for this to get rated, and we're expecting that once this is rated, price would potentially continue to drop lower. Why? Because we're not seeing highs being taken. Until we see significant highs being taken, we would continue to follow the dominant flow, which from Tuesday, it's not done, which from Tuesday, we saw these highs being formed and we've been pushing bearish. So again, flow or price action movement, where is it expanding the fastest? This is what we're paying attention to. We took this sell side, we're digging back up into somewhere in this range, and with this model, we're limiting our focus just to the ranges created in the sessions of 8, 1, and 7. So here we've got one premium recipe, OTE, a premium array, could be this fair value gap, which is again up inside the premium within a premium. So let's mark that out. And there's no action yet. The point of digging into this in this way is to say, what are the limitations of this model? Even though you are waiting for this sweep, you're waiting for price to get back above the range, you're looking for it to work this range, it doesn't mean that that's the be all and end all and you have no targets, you have no other analysis that's going on. So we got a couple of things we're working off of here. Relative equal highs, internal. We've got range high, broken back into the range. We're seeing at the end of the kill zone, price is back into a premium area. So we're going to watch and see, are we going to get anything that goes above this buy side and a market structure shift? Are we going to see anything within this OTE? Or could we see anything that tags back into the very top of this range from what we're paying attention to in this model for a push down? So here we have a shift, a displacement at the high or at the 50%, right at the OTE. Looking at this, not enough really yet. So let's check out the 2-minute. Okay, so we have potentially a mitigation here. So 2 sell side shifts, that low and this low. We also see this fair value gap, which would be right at the body of, so let me slide some of this around here. That's the OTE. Here's the 50% inside this fair value gap. So a lot of premium stuff going on here. Now we're above the 50% of the range midpoint, and we're inside the higher level premium. So the potential trade here is most aggressive would be here. Next entry would be here on this consecutive run to swing back into premium one more time with an entry at around this level. Stop above the highs, and then we'll be looking again at targeting this kind of choppy movement here. Retraces not many consecutive candles of the same color until this last push up into that last range, little bit of premium here in the OTE. As price wicks in, we're looking for stops above the high, entry on the fair value gap. There's even actually another fair value gap right around this shift. So again, premium discount concepts one more time would be intermediate high, low. We're not looking for anything until it gets above 50% here. So that fair value gap is actually valid. The second one does exist. It does tag into it. But this is now like classic 2022 model stuff. So let's see how this works out. So on this 2022 model entry, stop above the high, we're starting to see price dip up into premium, and now we're digging down into discount. And we're attacking these range lows one more time. So as we look at these range lows and start to keep them in mind, we're also now looking in this leg at what discount or raise may still be left. And this order block would still be valid. This fair value gap got really eaten up. So from a balanced price range perspective, high, low, reprice, retest, move out. This would be done. If price was reacting off of anything here, that would be a big concern. And lastly would maybe be the last candle here, or this is the lowest candle from wick to wick that hasn't been touched yet. So that would be the move. And we know by 2 o'clock we're taking definitely something off or moving to the sidelines. And then our last form of sell side liquidity off of the Asian range would be here. So this price action is framed up nicely where price doesn't give a shift until late in the kill zone. The price action is choppy. The higher time frame perspective is bearish because we did not take that intermediate high. So that would be here. So this intermediate high was not broken. So that maintains the movement down where sell side keeps getting attacked, keeps getting attacked, keeps getting attacked. So now we'll see, do we have any more retraces into premium before we start to attack discount arrays. So here's that first discount array, the fair value gap. Then we have the order block, which is the one that's more relevant. You can see even around that 50% level, that price action is just so excitingly perfect. Like, it reaches up to it, clears through it, comes back to it, reaches the premium, comes back to it, reaches the premium, fights through it, breaks down, one more touch, and then just aggressively attacks that order block. And then as price respects the order block as an inversion, we would expect to see more aggression to the downside. So here's that order block being tested one more time, and now we're attacking this last piece, and we see respect to the piece of this order block here, this down close candle, before price comes into midnight. Let's see if we get any more bumps up into premium. Nothing. Aggressive shift down, just straight through. So now the next thing will be this sell side target, and we'll mark out 2 just for context here, and we're looking at how does it tackle this sell side. So that's that touch on sell side, push straight through right at midnight, and just disrespects this this fair value gaps low. Bodies close within. So now we'll see, boom, like just rips through it. So now we're into discount again. We have to go up in a time frame. Let's start with a 15. And we see this choppiness that I was mentioning before. All that choppiness now is just looking so tempting to just rip through. And let's clear this out, and let's just watch this play out in respect to this these sell side targets down here. And so price just rips it. All right, so now we have that fair value gap broken through. This was that H1 fair value gap, and we're seeing it turn into an inversion. Let's see how high price will go up. 2 o'clock, one more candle. So 2 o'clock, price is coming back into it. Definitely have to take something off. Entry all the way up here on the 2022 model. Nice displacement down. If anything, we'd be looking at this as an inversion if we had anything left on, or we're coming back up into, again, premium discount concepts of here. There's a nice fair value gap inside of here. Just for funsies, we'll see we get back all the way into the premium of this leg, and let's see if we'd have gotten the rest taken out, or if there's any more expansion to the downside. So we're back through this fair value gap here, coming back up, and ooh, nice. So 2022 model would have held intact, stop at break even if that was your risk management model, or just kept your stop open, partial off anywhere between these lows and definitely by 2, which would be the start of another range setting price action for London. Price dips back up into premium right around here. I'm sure there's some stuff that could be analyzed off of these highs being bumped, market structure shift, this wick dipping back up into premium, and now we're attacking that downside again one more time. And I'm interested to see if this ultimate relative equal lows get tagged or not. So going into Friday's Asia model, actually I might do a different journal entry because there's probably some fun stuff around here as well. I know I participated in it, but I didn't mark up my journal entry. But let's just see how price comes through that discount range, bumps those intermediate highs back into a fair value gap in here on the 15-minute, and takes them. So, oh, that was fun. So 2022 model from Thursday's Asia, nice aggressive move down, bumps this sell side, but actually doesn't even touch it, makes relative equal lows, sets out another set of targets to the downside here. That sell side is great. Retest the premium of the original range, aggressively goes down, tags back into a fair value gap, rips through that discount array, and that's all she wrote. So this is good, man. Keep practicing it, adding in the concepts. The ICT cookbook recipe book comes into play, and do it again.